Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Nina Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Nina Mishra. My guest today is Brandon Rexchowski, Director of Product Management at VanEck. And we are talking about rare earths today, something many of us hadn't really heard of before, but suddenly we have realized that these rare earths are incredibly important. They are key ingredients for so many industries. And in fact, now they have become the new battleground in the trade war with China. So on Friday, stocks plunged after President Trump threatened to impose an additional 100% tariff on Chinese imports that was following Beijing's new export controls on rare earth minerals. And VanEck offers a rare earth and strategic metals ETF, REMX, that is up over 85% year to date. So, Brendan, welcome back. Great to have you with us today.
Oh, it's my pleasure. Thanks for having me back.
Let's start with the basics. What exactly are rare earth minerals, and are they really that rare?
Yeah. So as you alluded to, most investors don't follow the rare earth material market all that closely. And when they do, it usually is tied to some sort of news cycle or some sort of major geopolitical event. But rare earths are a subset of the periodic table. They are essentially 17 elements. They include many that are very difficult to pronounce, and many that most have probably never heard of. But common rare earth elements that are widely discussed across industries include, elements like neodymium, scandium, and cerium. And rare earth elements, although rare is in the name, aren't necessarily all that rare. In fact, they can be found commonly in many areas of the world. But they are rare in the sense that they're rarely found in high concentrations. And often they're generally mixed with other elements or other rare earth elements. So therefore, the extraction and the process of rare earths can be somewhat cumbersome, can be dirty, and can produce a good deal of harmful waste. So rare earths are rare in the sense that they're difficult to get out of the ground and be put into practical use. It can be costly, and it can also have some environmental implications. But when we think of rare earth metals, because it is a fairly limited number of rare earth metals, we often think of some other, what are often considered critical or strategic metals that are not technically considered rare earth elements from the periodic table. And we tend to look at roughly 25 other elements from the periodic table that are very critical and strategic to many very important industries in our world. And these include probably more household names, some elements like lithium and cobalt that have become widely followed as it relates to our clean energy revolution. Other names like molybdenum and titanium and tungsten and manganese and gallium. These are all very important metals that, while some of them are a little bit more recognizable than rare earth elements, these are all very important in many different applications.
Right. So that's what I have also been reading over the past few days, that these are critical inputs in so many things, from iPhones and laptops to data centers and jet engines. So tell us, which industries rely most heavily on rare earths as critical inputs and would be affected if those Chinese export curbs are implemented?
I think you hit on it, Nina. These are vastly, widely used inputs across many applications, from industries like national defense straight through to everyday life of you, me, and everyone listening in to this podcast. But let's start at the kind of the critical national security side of the spectrum, and that that's the aerospace and defense industries. So rare earths, as well as some of these strategic metals, are used across many defense applications, from jet engines straight through to night vision and optics devices, drones, of course, and guidance systems. So these metals are very important to many national security and defense applications. Also very important, not from a probably national defense perspective, but from an energy security perspective, clean energy. So this entire energy transition that we are in the midst of is very reliant on many of these metals. Anything from wind turbines and solar panels straight through to electric vehicles and the batteries that they use, and then very importantly, and also in the headlines these days, nuclear applications, small modular reactors, you name it. The abundance and prevalence of many of these elements and metals are everywhere throughout the clean energy sector. And then, of course, in everyday life, many of the devices that we all use multiple times a day, every day, in the consumer electronics area, are heavily dependent on rare earth elements and other strategic metals. So headphones and televisions, robotics applications, smartphones, like you said, iPhones and others. These are all very heavily dependent on a global supply chain of rare earth and strategic metals. I would mention, magnets are something you may read quite a bit about, particularly as it relates to some of the recent trade negotiation. Magnets are very important in many different applications, and some rare earths have incredible magnetic strength. So they are preferred for any use of applications that require continued motion. So, wind turbines and even, if you have little ear pod headphones that have kind of almost microscopic speakers, they require motion to create sound, and magnets are used throughout ear pods. So these are all very important applications that find practical use across many industries. And one other area of importance within rare earth elements is that some of these elements have very high temperature tolerances. So you think about a jet engine on an airplane, any modern jet engine. Some of the components in a jet engine they're required to operate at temperatures well above any particular component's melting point, essentially. So rare earths can be used to coat different inputs in jet engines and things of that nature. So all of these are just so critical, not only to everyday life, but really important from a national security perspective as well.
We understand that China currently dominates rare earth production and processing. And so could you explain how that monopoly developed and what the latest export restrictions mean for the rest of the world?
This is a fascinating area, and many are just reading about it today, but there's some history there. But I think it helps to put this in perspective. Like you said, it's a virtual monopoly out of one country, and that's China, on rare earth elements, as well as many of these other very critical strategic metals. So to put it in perspective, rare earths, if you think about the extraction, so the production of rare earths, as well as the processing or refining of those metals into different components, China accounts for over 90% of both the production and refining capabilities of rare earths currently. That's globally. So over 90% of rare earths are produced and then refined and into production out of China. That's just a dominant position. And again, a lot of that has to do with what I mentioned earlier. This process is dirty. It's difficult. So many Western nations have hesitated to move into this area of the market, but it does not stop at rare earths alone. Other very important metals, to many of the applications we discussed earlier, are also very much influenced, if not dominated, by China. Cobalt, for example, nearly 80% of cobalt is produced out of China, and about 80% is refined out of China. Lithium, also extremely important. About 70% of the global supply is produced out of China, and then almost 75% is then processed and refined through China. So these are all very important metals, and there's a consistent, far-reaching theme, which is China dominates this industry. So we're hearing now about export controls and other measures that China has taken in recent months, and most notably, probably most recently, as it relates to some of the market action of the last several weeks. But this is not necessarily a new phenomenon. China has dominated the rare earth market for some time now. And you can go back to 2010, actually, which actually happens to coincide with the time period in which we brought the REMX ETF to market. And there was a major kind of territorial dispute between China and Japan. And the net effect of all of that was that through implied but perhaps not explicit methods, China was cutting off supply of many really very important rare earth elements to Japan as part of this territorial dispute. And that lasted upwards of 2 to 3 months until that was resolved. And that really opened, I think, the world's eyes to the dependence that we all have on China for many of these metals. So there was a lot of efforts following the 2010 events to start to increase some of the supply chain and outside of China. However, they still managed to dominate this current landscape. So again, this is not a new phenomenon. I would stress that China has leverage here. They dominate these markets. They even used some modest leverage in the 2018 trade negotiations, if you go back to the first Trump administration. But most recently, what China has been doing has been a bit more measured and seemingly better thought out in some regards. And this includes various export controls on certain rare earth elements out of China, but also licensing requirements. China's trying to control essentially the full value chain, if you will. There's also end use clauses related to some of their current actions. So they're essentially trying to gain control over the entire supply chain and impact and influence where some of the Chinese originated rare earth elements are ultimately used downstream. So this has a lot of implications for downstream uses, and I think makes for maybe broader vulnerabilities in the market and greater dependencies. So, these recent actions ultimately, China's exerting its force and using rare earths as leverage in these trade negotiations, and clearly they can also use them for other potential geopolitical disputes moving forward.
That's a fascinating background. So obviously these materials are not that rare, and they're not very expensive either. In fact, I read an article in Bloomberg that the amount of government spending which is needed to secure most of the world's supply of rare earths is tiny, and they estimated probably $200 to $350 million. So that was really surprising. But given the importance of these critical materials and China's dominance, now I think US and other governments are working to strengthen or rebuild their own supply chains. But as you explained, it's not easy, and building those alternative supply chains could take years probably to significantly reduce dependence on China. So could you talk about some of the recent efforts by the US and other governments?
There's certainly been action. There are many examples of government and private sector action in recent periods, just in 2025 alone. So this year, there's been quite a bit of cross-border activity, ranging from countries like Japan and Australia to India, the United Kingdom, South Korea. Many are making efforts to shore up their supply chain and reduce their dependence on China. Let's start maybe in the US, where we see a lot of the major headlines and some of the most market impacting actions so far this year. And a lot of that took place around a US company called MP Materials. So, one of the few US companies seeking to produce and refine rare earth elements. The U.S. Department of Defense earlier this year announced a significant investment in MP Materials, a $400 million investment in preferred equity in MP Materials, making the Department of Defense the de facto largest shareholder of MP Materials. So a major capital infusion into a company that's trying to get to scale and become a major supplier of rare earth elements. As part of that deal, the Department of Defense also committed to a 10-year price floor for certain magnet oxide inputs. So providing that price floor provides companies that are investing significant capital into ramping up operations. It provides them some security from a capital perspective as well. So a lot of actions from the Department of Defense. That's been one of the channels Trump thus far has used to invest in various infrastructure and new technology. The same holds true with some of the nuclear initiatives that the Department of Defense and Department of Energy have been very important in various investments and innovations announced this year as well. So that's been one specific governmental action. But there is a lot of speculation that this price floor component as part of that deal will not be a one-off. Back in July of this year, there was a meeting with many of the various industry players, as well as some tech executives and some of the Trump administration trade advisors, where there was essentially an assumption based on the discussions in that meeting that this price floor concept could be extended beyond the MP Materials deal. So a lot going on in order to shore up supply chains. But I'd also note that beyond government actions, which of course many governments are certainly interested in shoring up supply chains for national security interests, private companies are also very much part of the conversation. So as part of that MP Materials deal, Apple committed $500 million to purchase various output from MP Material into the future. So providing that kind of guaranteed customer base from the private sector, also very important. And they're also investing in recycling facilities as well. So this interesting combination of public and private investment in this space has brought a ton of eyeballs to this entire sector.
Now let's talk about your ETF. The ticker symbol is REMX. And as you alluded to earlier, this focuses not only on rare earths, but other strategic metals as well. So could you talk about this ETF? What does this ETF focus on? And also talk about some of the top holdings. And you were talking about MP Materials. I noticed that that stock and some other stocks in this ETF, which are holdings in this ETF, they have skyrocketed lately.
That's right. That is right. We'll definitely talk a little bit about some of the rare earth specific holdings in the portfolio. I mentioned earlier, rare earth represent about 17, they do represent 17 elements on the periodic table. We also focus on about 25, maybe 26 other elements that are considered critical and strategic. And our ETF tracks an index that is measuring mining companies' exposure to those specific metals. And the goal of this ETF in tracking its underlying index is to provide pure play exposure to the companies that are principally engaged in producing, but also refining and even recycling those specific metals. So what you will not find in our ETF are large, kind of diversified miners that may be important players in the rare earth and strategic metal space, but a small portion of their revenue or mineral reserves are tied to rare earths and strategic metals. They may be much more focused on copper mining, the platinum group of metals, iron ore, things of that nature. So we want to provide those companies that are directly tied to these underlying metals. And as a result, we have seen, interesting exposures over time that can very much depend on the supply-demand dynamics for certain metals and others. If you were to look at our ETF 5 years ago, you would have seen pretty notable lithium and cobalt exposure as the price for lithium and cobalt began to climb higher and higher as it became apparent that we would probably be in a supply deficit position as it related to the rapid build out of electric vehicles and battery technology and other areas of the market. That conversation has totally changed as globally China and others ramped up production to the point where we're actually in an oversupply environment for lithium now. So the exposure to lithium and cobalt, for example, is probably lower than it was. And right now, because of the resurgence of rare earth companies, we're starting to see more and more prominence of those rare earth companies in our portfolio. Currently, about a third of the portfolio weighting is tied to these pure play rare earth companies. From a country perspective, it is a fairly diversified exposure despite China's dominance. We do include Chinese companies in the portfolio. We'll see some Hong Kong listed names, but we do also include China A shares traded through the Hong Kong Stock Connect program. So China currently is about a quarter of the portfolio. And then Australia and United States follow just shortly behind. I misspoke. I should say Australia is slightly higher weighting than China, and then the United States comes right behind China. So it's a pretty diversified portfolio, but there are only so many players in this space. So it's a pretty concentrated basket from an ETF perspective. Some of the top holdings, like I said, and you mentioned, MP Materials has performed extremely well following all of the governmental investment and private investment. And that has carried with it some other notable rare earth companies in the space, like Lynas Rare Earths out of Australia, another top holding, China Northern Rare Earths, which is a China rare earth producer. A company in the top 10, Hyperion X. It's focused a bit more on titanium and some other metals, but rare earths is also a pretty large part of its mix. And then, as I mentioned, lithium, of course, is a very important metal in this conversation, and we do have notable exposure to lithium within the portfolio. So companies like Albemarle and Lithium Americas, Pilbara, Liontown Resources, and then the Chinese lithium producer Ganfeng Lithium are all major players in the space. So I would say if you looked at REMX, you're going to see notable exposure to pure play companies producing and refining rare earth elements as well as other strategic metals. What you won't find are large mining conglomerates that are active in the space, but are not heavily influenced by actions like we're seeing today with the trade negotiations.
Very interesting. Now, switching gears a little bit, I wanted to talk about some other areas of the market that you are feeling bullish on right now. And it's been an awesome year for stocks and even more so for gold. And I was looking at the performance of some of your ETFs, and the junior gold miners ETF is up more than 161% year to date, and the gold miners ETF, which is the largest in the space, GDX, that has also done very well. It's up almost 150%, and your uranium and nuclear ETF NLR, that has also done very well. And in fact, we had Imaru Casanova from VanEck on the show back in April, and I'm sure that some of our listeners followed her advice and bought some gold and gold miners, and they are very happy. So anyways, which areas of the market you are liking now?
Conveniently for me, named a lot of them. We've seen incredible interest and very, very strong long-term structural cases play out for several areas of the market. Some more, AI and data center tied. So semiconductors is one. We have seen this incredible investment in AI infrastructure unfold over the last several years, and there's really no sign of that slowing. So semiconductors are a major beneficiary of that investment in AI, as each of these huge hyperscalers are really just trying to win this arms race and invest in the infrastructure needed to power these large language models and other aspects of the AI value chain. So semiconductors are a very interesting part of that, and that's a nuanced dynamic. It's kind of a small industry, and there's some that specialize in various aspects of the semiconductor supply chain. So that there's a lot of compelling wind in the sails of semiconductors. And then how do you power this AI revolution? And that's the nuclear and uranium exposure. Again, the demand for more electricity, we're at levels that we have not seen in quite some time. And for the first time since the 70s, electricity demand is outpacing GDP here in the United States. So a lot of interesting angles in the nuclear space, particularly with innovative new technologies, small modular reactors, advanced fuel companies, all very interesting. And gold, gold has been fascinating to watch. That trade does not seem to be slowing down as investors seem to seek diversification away from, governments and their high deficits and incredible debt loads. Gold, particularly in the U.S., so gold has stood out. And then finally, to your point, Nina, gold miners, which many investors, don't have a lot of patience for, because at times it takes some time for the miners to finally outperform the metal. But this year they're doing so in a big way. And it's this confluence of central bank buying now finally being paired with investor demand, as we see physical gold ETFs finally bring in investment from Western countries. And now the miners are all operating at levels where, with gold prices at 4,000 or above, they're essentially profitable across the board. It's really, really fascinating to see. So those are some of the areas of the market that we've been watching closely. The AI trend, there's always fears of bubbles there, but the investment in AI as a percentage of GDP is actually less than we've seen in other major technological advancement stages, from UK and the US railroads straight through to some of the investment preceding the early 2000s around telecom, and then of course network and technology investment at that point. So there seems to be some room to run in many of these trends.
All very interesting areas. We'll have to leave it there, Brandon, but thank you so much for joining us today and for sharing your insights.
Thank you for having me. It's really great to join you and have this discussion.
That was Brandon Rexrosky from VanEck. And the ETF that we were talking about is the VanEck Rare Earth and Strategic Metal ETF. The ticker symbol is REMX. We also briefly discussed the gold ETFs, gold miners ETFs, and the ticker symbols are GDX. And for the junior gold miners ETF, it is GDXJ. Then he talked about the semiconductor ETF. The ticker symbol is SMH. This has also done very well this year because NVIDIA and Taiwan Semiconductor are its top holdings. And then he mentioned the nuclear ETF. It is the VanEck Uranium and Nuclear ETF. The ticker symbol there is NLR. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. Make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.